Now, I know most of you know that the markets open at 9:30 in the morning. And if you're in Eastern time zone, I used to live in California and it used to open at 6:30, but now it's 9:30 in the morning. But a lot of traders don't know. A lot of you don't know that most of my work, most of my most important market analysis is not done during market hours. It's performed before the market opening, actually several hours before the opening bell. That's the time I create my game plan. That's where I figure out what type of market it's going to be, a trending market or a slow market. Is it going to be a volatile market or is it going to be a complacent market? That's why everything I do in the morning dictates where the market is going to be and what kind of works out my plan for the rest of the session and helps me stay ahead of the market. So I usually look at three fundamental pieces of information. They're not fundamental, they're technical in nature or market sentiment, but there's three pieces of data that I look at before they open to make my game plan for the rest of the day, and I'm going to share them with you in this video. But again, most of my planning and what I'm going to do during the session occurs before the opening bell, before the market ever gets a chance to open. Now, we're looking at the E-mini S&P futures contract. The reason I look at the E-mini S&P futures contract is because it virtually trades around the clock. So when I'm seeing it in the morning, let's say 7:30 in the morning, 7 in the morning, which is when I start looking at the market, I'll see what it did in Europe and Asia the entire night. So it gives me a good barometer of the impact of the US market based on what happened in Europe and Asia. Now, I obviously look at the news, I look at the reports, and I look at fundamentals, but the E-mini S&P gives me a very quick picture, a global view of what I might have missed between the closing of the US market from the previous session and what happened in the European market and in the Asian market that might have influenced the US stock market. So this is a really good, very quick visual. Not only do I look at the daily chart and see what it's doing in the morning, but I also look at the one-day session. So I look at to see what happened, the high, the low, the trading range. This way I get to see exactly what happened overnight, and I get to set my alerts because I'm not going to sit there and watch this market, but I'm going to change the settings to reflect what happened overnight because it's very important if the market takes out these levels. If I break out the overnight swing high or the swing low, that's crucial. So I want to make sure those levels are accounted for because if it breaks out that range, that means something is happening beyond range bound markets. Now keep in mind, the US markets are counter trending markets and they're range bound the great majority of the time. But whenever you have something happening outside of that range, like for example, the high in the last swing high was at 3,374. If something takes out, if price action takes out this level to the upside, that means something important is going on. Conversely, if the price action takes out the 33.55 level to the downside, something important is happening to the downside. So I'm not only looking at daily levels, I'm also looking at the intraday levels to see the highs and lows. Once we're done with the S&P 500 and I get a really good idea based on looking at it what I missed throughout the entire night, and I get a quick way to catch up on it, I move on to the bond market. Now, a lot of you look at the 30-year bond. A lot of you look at the 10-year note. A lot of you look at the ETF ticker symbol TLT, which is a stock asset that tracks the long bond. So again, there's several different assets, but I like to look at the futures contract because again, I get to see what happened overnight and I get to minimize the time period so I could see exactly if it's taking out the swing highs or the swing lows, if price action is following through or moving below or above. Imagine sitting there between 5 p.m. and 7 a.m. overnight and just looking at the data. That's what I'm getting by looking at the overnight session. So again, this gives me the high, this gives me the low, this gives me the projected trading range. I can also see how the volatility moves. I get to see all that by looking at overnight data. I get to see if something spectacular happened, if something that may increase volatility, if volatility is shrinking. All of that will be reflected in the bond market. All right. And finally, I look at the volatility. I want to look at the VIX index. The VIX calculates the implied volatility or the fear level that's in the overall market. And by looking at the VIX level, I'm able to gauge whether the markets are fearful or nervous in real time. So in other words, in this case, volatility is increasing, which means markets are getting scared, they're getting nervous, they're getting fearful. If this was down 6%, then I would say markets are getting more complacent. So this is a real-time gauge. The VIX is a real-time gauge of the implied volatility levels on the S&P 500, and these levels help us gauge market sentiment, fear, and greed levels on the market. And again, by looking at this overnight, I'm able to compare it to the S&P 500 and get a good picture of whether or not the stock market is complacent or if the stock market is overbought or oversold, if more fear, if the stock market's increasing fear or decreasing fear level. And all of this gives me a really good idea of how to create a game plan for the session. Now, if you're not using pre-market data, folks, you're leaving tons and tons of money on the table. I'm not kidding you. Now, last few weeks, I've been receiving these trades from a world famous trader. I mean, this guy's a world-class trader. He's amazing. And up until now, I have not mentioned his name. I kept everything private because I think somebody's been following me and spying on me in my office. One of my publishers, anyhow. You don't want to miss this. This trader and I are going to have an event. It's going to be an amazing event. It's going to change everything. I mean that. It's happening this Thursday at 1 p.m. Eastern Time. And I'm going to expose you to how this trader earns thousands every day before the market opens. You don't want to miss this one-time event. It's going to be explosive. Make sure you follow the link below. Now, I can vouch for this trader personally. I know this guy really, really well. I've seen what his trades can do. I've seen him generate up to 93.2% win rate and gains of up to 1,000% plus. Folks, I'm not kidding. This guy is like a mentor to me, all right? You know, there's a book called Market Wizards. He could easily be in that book. As a matter of fact, I know a few market wizards that follow this guy. I'm not hyping this. I really mean that. This guy is the real deal. I'm so excited to share him with you. I don't know what to do about it. Again, this Thursday, I believe it's going to be the 20th of February, 1 p.m. Eastern Time. Please, please, please do not miss this. It's going to be huge. I mean, huge. This guy is the real deal. All right? I think I've said enough. Follow the link below. Register now. Remember, most of what we do during the day, we analyze and figure out before the market opens. That way, we can play golf or do these videos instead of sitting around waiting for a trade to develop. We got a game plan and we can start moving. Don't miss out. February 20th, Thursday, 1 p.m. Eastern Time. Follow the link below. This is going to be the coolest thing ever. I'm so excited I can't stop talking about it. See you guys soon.